Welcome to the Deep Dive, where we break down complex topics. We take all those sources you give us and pull out the most important information, giving you a shortcut to really understanding what's going on.
Exactly, cutting through the clutter.
Today, we're looking into Boston Scientific,
BSX.
a major player in medical devices.
That's right.
We've got articles from Zacks.com, Dividend.com,
Ah, good sources.
Wikipedia as well,
Always helpful.
plus a stock forecast summary from TipRanks.com. Let's dive in and see what we can learn.
Sounds good.
To really understand where Boston Scientific is now, it helps to look back at where they started.
Absolutely, a little history lesson.
Founded back in 1979, initially as a holding company for Meditech,
Interesting. So not starting directly in the medical device space.
but they quickly shifted gears, moving into interventional medicine.
Makes sense. That's their bread and butter now.
Right, and those early acquisitions like cardiovascular imaging systems and target therapeutics show that commitment.
Building their expertise, expanding their reach.
But it was the Taxa stent, that drug-eluting stent, that really put them on the map.
A game changer for coronary artery disease.
A real breakthrough. And that drive for innovation continues today. Boston Scientific is still very active when it comes to acquiring other companies.
They're not standing still, that's for sure.
Their recent acquisition of Cameron Health, known for their minimally invasive implantable defibrillator, is a prime example.
Pushing the boundaries of what's possible in that field.
They've got a long list of acquisitions. Bridgepoint Medical, focusing on treating coronary blockages.
Staying within their core area.
Rhythmia Medical for cardiac mapping. And then there's Vesix Vascular.
Now that one's interesting.
They use radiofrequency energy to treat hypertension.
Renal denervation, right. Cutting edge stuff.
Exactly. And very recently, they acquired Relievant Med Systems, an $850 million deal to expand into pain management.
Wow. That's a significant investment.
It is, and they've also got a pending acquisition of Exonics, Inc. for $3.7 billion, boosting their electrophysiology and heart product lines.
Clearly, they're committed to growth through acquisitions, but that begs the question. How's their financial performance looking with all this activity?
Well, Zacks gives Boston Scientific a 2-buy rating right now.
Okay, so a good time to buy in the short term.
That's what it indicates, a 1 to 3 month outlook. The stock is currently around $91,
Not bad.
with a 52-week high of $91.93 and a low of $55.69. And if we look year to date, the growth is impressive, 57.53%.
Definitely an upward trend. Sounds promising.
It does. And when we look at earnings per share, the estimates for this quarter are about $2.65. For the full year, analysts are projecting $2.46. Zacks analysts are even predicting a long-term EPS growth rate of 13.8% for Boston Scientific.
So overall, a positive outlook for their future performance.
Seems that way. But there's a caveat. Zacks also gives them a C grade for both value and momentum.
That's worth exploring a bit further. What do those grades signify for someone considering investing in BSX?
Those C grades come from the Zacks style scores.
Okay, I'm familiar with those.
They're designed to help investors figure out how a stock might perform based on different investing styles. So a C in value suggests that BSX might not be the most undervalued stock out there right now.
Makes sense. And what about that C for momentum?
That indicates that their recent price performance has been, well, relatively average. It hasn't skyrocketed, but it also hasn't lagged significantly.
So while there's growth potential, it might not be a screaming bargain at its current price. Given all this financial data and their acquisition strategy, how would you assess the overall economic impact of a company like Boston Scientific?
They're a global company operating in over 100 countries.
Wow, that's a massive reach.
They have a large workforce, of course, but their impact goes way beyond just direct employment. Their supply chain, their research and development, the partnerships they have with healthcare providers, all of that contributes to the economy.
Right, they're deeply integrated into the healthcare ecosystem.
They're a major force in the medical device industry, no doubt. And their innovations have the potential to really make a difference in patients' lives around the world. But when we're thinking about them as an investment, we also need to consider their dividend policy.
Of course, that's a key factor for many investors.
And here's the thing. According to Dividend.com, Boston Scientific doesn't currently offer any dividends.
Zero. Really?
Their forward dividend is listed at $0, and the yield is 0.00%.
So not an income-generating stock, at least not for now. That's something investors focused on dividend income will want to keep in mind.
Definitely. And speaking of things to consider, what about their share buyback program?
That's a good point. There's no mention of a share buyback program in the materials we have,
Interesting.
which could suggest they're focusing on investing in those acquisitions and internal growth rather than returning value to shareholders through buybacks.
Lots to consider when it comes to Boston Scientific's financials and what it all means for potential investors. Before we move on to some of the other crucial aspects, like their ESG factors, are there any other key financial takeaways you'd like to emphasize?
I think it's important to remember that while their recent growth and those long-term EPS forecasts look promising, the lack of dividends and those C grades for value and momentum mean investors need to be cautious. It's about weighing those factors against your own investment goals and your risk tolerance.
Excellent advice. Now, let's switch gears a bit and dive into some of the ESG factors surrounding Boston Scientific, as those can be just as important in deciding if this stock is right for you.
Agreed. Understanding a company's environmental, social, and governance practices is crucial for any responsible investor. And Boston Scientific has had some controversies, particularly regarding their medical devices, so let's start there.
We were just talking about how important those ESG factors are when you're evaluating a company, and Boston Scientific has had its share of controversies.
They have, especially with those vaginal mesh products.
Right. Back in 2019, the FDA ordered Boston Scientific to pull all their vaginal mesh products from the U.S. market.
A big step for the FDA.
It was. And it came after years of complaints and lawsuits from women who experienced serious complications.
Like chronic pain, mesh erosion,
Even organ damage in some cases.
really serious stuff.
It really makes you think about the impact medical devices can have on people's lives.
Mm,
And it raises questions about the company's commitment to patient safety.
absolutely. Those are valid concerns.
Did all those lawsuits have any financial consequences for Boston Scientific?
Oh, yeah. They faced a wave of litigation.
Costly.
Very costly. They ended up paying out hundreds of millions of dollars in settlements. Not only did that hurt their bottom line, but it also damaged their reputation.
Eroded trust with patients and healthcare provider.
Exactly. And that kind of trust is hard to rebuild. It makes you wonder if profits were put ahead of patient well-being.
A tough question to grapple with. Are there any other ethical concerns about Boston Scientific's products that investors should be aware of?
Unfortunately, yes. The Wikipedia article also mentions legal issues and settlements related to defective heart devices.
Pacemakers, defibrillators, that sort of thing.
Right. Some of those devices malfunctioned, leading to serious health problems.
That's concerning. Were there any specific allegations about why these problems happened, besides the devices themselves being faulty?
There were also allegations of kickback schemes, doctors being encouraged to use Boston Scientific devices.
Adding another layer of ethical concern.
It does. And on top of that, just this past April, their obsidio-embolic device got hit with a most serious recall by the FDA.
That device is used to control bleeding during surgery, right?
That's right. The recall was due to a risk of bowel ischemia, which can be very serious.
Requiring hospitalization, even leading to death.
Exactly. It wasn't just a hypothetical risk either. The recall was prompted by actual adverse events reported by healthcare providers.
So it was a real and present danger.
It was.
This latest recall just underscores the inherent risks in the medical device industry. Even with all the testing they do, problems can pop up,
It's a reminder that things can go wrong.
affecting patients, a company's finances, everything.
For sure.
Given all these ethical and legal issues, how much do they weigh on the potential of Boston Scientific as a long-term investment?
That's the million-dollar question, isn't it? It's a crucial aspect to consider.
It is.
They have impressive growth and they're innovative, but these controversies highlight the risks. They raise concerns about their corporate culture.
Whether they prioritize profits over patient safety.
Exactly. And those concerns could impact their future, even with all those positive financial projections. So does this mean investors should just stay away from Boston Scientific completely?
Well, not necessarily.
Right. It all comes down to due diligence.
Really digging into the details.
Investors need to weigh the potential rewards, the strong growth, the new products against those risks.
It's about understanding your own investment goals and how much risk you're willing to take.
Exactly. Some investors might be really uncomfortable with those controversies.
While others might see them as manageable risks, especially considering that growth potential.
That's the key. It's a personal decision. But ultimately, is BSX a good fit for your portfolio? We'll tackle that question in the final part of our deep dive.
We spent the last two parts really digging into Boston Scientific's performance, their innovations, and yeah, those controversies. But now, let's zoom out a little bit.
Take a broader view.
Exactly. How does a company like Boston Scientific fit into the bigger picture of the medical device industry?
That's a key question for any investor.
It is.
The good news is there's a ton of publicly available information to help us understand that landscape. Market trends, industry reports, government data, it's all out there.
So we can get a sense of the lay of the land. What's driving the medical device industry right now?
Well, the global population is aging, which means there's a growing need for medical care. On top of that, we're seeing rising rates of chronic diseases.
So more demand for treatment and devices.
Exactly. And then you've got the constant advancements in medical technology. All these factors are pushing the industry forward.
It sounds like a dynamic and competitive space. Where does Boston Scientific stand among its competitors?
They're up against some big names like Medtronic, Johnson & Johnson, Abbott Laboratories. These companies are all fighting for market share, launching new products, making acquisitions, running marketing campaigns. It's a constant race.
So Boston Scientific needs to stay on top of its game.
Absolutely. They have to keep innovating, maintain those ethical standards we talked about, and navigate all those legal challenges.
And that brings us back to the central question.
Yeah.
Is BSX a good long-term investment?
The million-dollar question.
We've seen their potential, but also their vulnerabilities. The recent growth is definitely appealing.
It is.
But those ethical and legal concerns are hard to ignore. It's a classic case of balancing risk and reward.
It is.
What are the key things potential investors should think about?
I think the biggest question is, are they comfortable with the level of risk? Given Boston Scientific's history, do investors believe they can overcome these challenges?
And keep growing in a sustainable way.
Exactly.
Ultimately, it's a personal decision. It depends on individual circumstances, investment goals, risk tolerance. All those things factor in.
For sure. Some investors might look at those controversies and decide it's just too risky. Others might see them as manageable bumps in the road, especially with that potential for growth.
Right. Different people have different perspectives. What we've tried to do in this deep dive is give you the information and context to make a well-informed decision.
We've laid out the facts, analyzed the trends, highlighted the key takeaways, both good and bad.
The rest is up to you.
Exactly. Do your own research, consider everything we've discussed, and then decide if Boston Scientific is right for your portfolio.
Remember, this deep dive is just a starting point. Investing is an ongoing process. Keep learning, keep evaluating, keep adjusting your strategy.
And stay curious.
We'd love to hear your thoughts on this deep dive. Head over to our YouTube channel. Let us know what you'd like us to cover next. Leave a comment below.